Myself Vaibhav. In today's session, we are seeing that gold has been able to hold above 1850 and slowly and steadily it has started to climb. And if we consider the current price action, it is hovering close to 1880. So, looking at its last couple of days of price action, I feel that the price level of around 1850 has been providing crucial support for the gold, and it might be the case that it can prove as a near term bottom. So, in today's session of Market Movers, we will see if there are any emerging opportunities for us to exploit the emerging dynamic to our advantage. If you consider the trading context, earlier in the day during the European trading session, we got some economic survey data, and here the numbers are mixed if we consider the overall picture for economic sentiments, consumer confidence, industrial sentiments, services sentiments, and also the consumer inflation expectation. Some of the readings are showing improvements, whereas some of the readings are actually on the lower side. And one of the important reading, the consumer confidence, is showing modest improvement, and this is the final reading. But the inflation expectations have gone down as the deflationary scenario is taking hold, and people are losing confidence that the demand is going to go up anytime soon, given the backdrop of coronavirus outbreak. We also got the Germany's CPI numbers, and here, as expected, the Germany remains in the deflationary zone, and for the month of September, the preliminary reading is at minus 0.2%, and this is the lowest reading since January 2015. So we are seeing that Germany is experiencing the deflationary scenario and worst of the last 5.5 years. Just a while back, we got the US trade deficit data, and here the rising imports have fueled the US trade deficit to the record highs. Now, for the month of August, the trade deficit stands at US dollar 82.94 billions, and this is the highest it has ever been. And one of the reason is being deducted as the industrial segment. Many of the industries are in the phase of resuming their operations. So to get started, they are bringing in the heavy capital intensive machinery and also the raw material stuff. So because of that, the imports have risen more than the exports. And later in the day, the presidential debate is also scheduled between Mr. Trump and Mr. Biden, and we might see some volatile moves in the market depending on how the debate spans out. So we will have to stay tuned for that development also. Now let's shift our attention to the technical aspect. First, we will consider the gold, and then we will move on to the equity segment where we will see the prospects for S&P 500. Let's start with the gold's technical outlook first. This is the daily time frame chart, and the gold has rallied substantially, and this is one of the best year on record. So here, after rallying past the 2000, the gold has entered into the retracement phase, and for past couple of sessions, we have seen it diving from 1950 to 1850, and then the last couple of sessions we have seen it consolidating with buying momentum picking pace as it approached 1850, and in today's session it is basically holding on to the gains which we saw in the yesterday's session. So in a way we can say that this 38.2% Fibonacci retracement level of its rally starting from 1450 to all the way towards 2050 is holding well, and in the short to medium term we have indeed the support on the lower side which is also technically important, And as the price action suggests, we indeed have some chance of looking for a retracement move on the higher side, which might take the gold beyond 1900 in next couple of sessions. So we will see if we have any good risk reward ratio and the optimum entry point for the trade which we are looking at in the gold. So on the lower side, we have to watch out for these first support of this month's pivot point series. So far, it has provided support on the lower side, though initially the price had broken below it, but then it rebounded and we saw these zigzag moves closer to this price level. Whereas if we consider purely from the price action perspective, the low was made little below 1850, but then we saw the sharp reversal, and now the gold is holding around 2 percentage point higher from its lows, the recent lows. And I feel we can utilize this scenario as long as the prices are still above this first support for a near-term retracement phase. So from that perspective, we can indeed look for the buying opportunities anywhere close to this first support. Right now, we have the gold trading almost 1.5 percentage point above those levels. But if we see any emerging opportunity where we are going to get the decent risk reward ratio, at least the ratio should be around 1 is to 2. I think we have a good chance of making money in the gold after it has fallen to these crucial, technically important levels of around 1850. Of course, the larger picture is still bearish. These are only initial phases, so we can't really say if the gold is going back towards its immediate swing high. Basically, here we are looking at from the short to medium term perspective and not from the longer term perspective. And because of that, we are going to be more concerned with how it holds closer to these crossover of 50 and 100 SMAs. We have this confluence zone shaping up around 1870 USD per ounce, and I feel we have to watch out for how the gold reacts to its interaction with this confluence zone. And as long as the gold stays above these confluence levels, I feel we have reasons to believe that if it is respecting this confluence zone, then most probably it will rebound back and try to get past these 200 SMA. And if we get the entry anywhere closer to 1870, then we will be pretty close to this immediate swing low, and the stop loss of around 1845 should be good enough. In that way, we will be taking a risk of around US dollar 25 per ounce, and to make the risk reward ratio 1 is to 2, we will have to target the price levels beyond 200 SMA. So on the higher side, we will have to target the price zone anywhere around 1920 to 1930, and we will have the good chance of the break above 200 SMA if the gold holds above this confluence zone. So watch out for the price action in today's session and see how it behaves moving forward in the North American trading session. We also have the debate lined up for the day, and there we might see some sharp moves happening depending on how the debate unfolds. Now let's see what's in store for the S&P 500. This is the daily time frame chart, and here the S&P 500 has also been in retracement phase for last couple of sessions, but it has rebounded very strongly, and after making low just close to 3200, it is back trading above 3300, and if we consider its movement, it is almost 5 percentage point higher from its immediate swing lows. And I think the medium term perspective, the direction has now reversed again on the higher side, and it will be better for us to look for the buying opportunities, as looking at the chart gives the impression that this was the retracement phase and it might be coming to an end, and we might see the S&P 500 starting to rally higher. So looking at that possibility, we will have to watch out for these pivot point series data. Here we have the first support, which initially provided the support, but then eventually we saw the break below it. Now the price is again back above it, and we will have to see how it unfolds here. We will have the immediate support in play. We also have this prior swing high, which is also likely to act as the near term support. So let's see how the price reacts around the price zone of around 3320. Right now the S&P 500 is about 1 percentage point higher, and I feel if it dips on the lower side anywhere towards 3320, that would be a better opportunity for us to look for the fresh entries. Right now it has rallied substantially higher and shown a minor move on the lower side, but there is still some more corrective move left, I think, and because of that, instead of getting involved straight away at the current levels, we will need to give it some more time for consolidation. And if it holds well closer to this first support, we will have more reasons to believe in its potential to move on the higher side. Right now, the regression curve is also sloping downward, and the only thing which points to the changing scenario is this break above this upper band of regression curve. And if the price action continues to play in this zone, then we might see eventually the flattening of this regression curve in next couple of sessions. So looking at the hourly chart, we have this break here above this downward sloping triangular pattern, and now if you consider these price levels around 3300, we have the golden crossover in place where we saw the 50 SMA crossing about 200 SMA, and on the lower side the 100 SMA is also inching towards the 200 SMA, as the price action has moved far beyond these 200 SMA levels, and we have the clear break and the formation of higher highs, and the only thing we now need is the formation of higher lows. We will need some sort of correction to take place before we feel confident enough to get involved in the S&P 500's trade. Here we have this support area developing nicely around 3300, and as we saw on the 4 hourly chart also, we have the support line up, and because of that, if we see some sort of correction taking place from the current levels, and if the price action really dips toward these 200 SMA level, and then it should consolidate closer to those levels, and we will have more reasons to believe in its potential to continue to move on the higher side. And in such scenario, we can indeed think about going in for the fresh trades, while looking for the entry anywhere in the vicinity of the price band of 3300 to 3320, while keeping the stop losses just closer to this line, the downward sloping price line around 3270 to 3280. So here, depending on where the entry is, we can go for a just little over 1 percentage point of stop loss on the lower side, while targeting a move of around 2 to half percentage point on the higher side, and that will give us the risk reward ratio of 1 is to 2, as well as we are looking at the possibility of S&P 500 continuing to move in the bullish trajectory. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.